Hello everyone, this is Ashok, and I want to cover some important information on financial freedom so that you go into foreign exchange to do some trading. Do not forget the dominant investing motive from the day you started. Okay, so quickly, why we trade and how we trade the foreign exchange. So this section I will cover a little bit and not too much information, but just enough for you to understand why we do and how we do it. Now, first of all, before you get into the foreign exchange, just look at this chart here on the left-hand corner over here. Shows the money you're going to make. On the bottom is the risk. So if you're putting money into banks, bonds, and money market, possibly you are fighting against inflation, and this kind of instrument doesn't keep up with the inflation, even though it's safe, but the money is not going to work. And if you intend to go to mutual fund and insurance company, they're possibly going to give you just above the inflation, or most probably is also lower than inflation. For example, in Philippines, the education inflation is approximately 7%, and the insurance companies are giving less than 7%, then you're engaging into a home product. Life insurance for me is basically risk management and nothing more than that. And again, the choice is yours. And if you're taking mutual funds, you need to know the moment you buy, you lose a 5% immediately, and every year they charge you a kind of investment returns, or they call it managed funds, and you also get deducted from the cross. So basically, you're getting nothing at the end of the day. Possibly, if the trend is moving to the direction that you buying at the right time, possibly you are lucky. But if in the wrong time, in the wrong place, you're probably going to lose money in mutual funds. I still prefer the precious metal, the index stock and shares, and not call the foreign exchange derivatives, junk bonds. These are pretty good, but this need a lot of knowledge, and this needs a lot of practice and getting involved in the market actively. So again, depending on your risk, you can choose any instrument that you want. Make sure at the end of the day, why you trade is important, because the amount of money you're going to make depending on the lifestyle you're going to have. So make it clear there, and once you understand that, then you're pretty good. Now, how do we buy and sell currencies, indices, and metal? Now, first of all, we go into this called the technical analysis. We look at a chart and decide on the price. And if the price is favorable to me, and if there's a value in investing that particular product, we go in and invest in the product. But again, before we engage into metal is a safe haven, like gold is a safe haven. Indices basically telling the economy how the economy is doing very well or not doing well. If doing well, then we engage. And the borrowing cost will be cheap. So if the borrowing cost is cheap, I borrow those money and put into the country that the ability to make money is there in the exchange. Currency, depending on the economy health, if, for example, the US is now growing rapidly, and I will invest on the US dollars, because in long term looks like the Federal Reserve is going to increase rate, and that is good for the currency, and the currency move up. On the other hand, I look at euro dollar, euro in a mess right now. But again, the euro dollar is now standing at 108, 109 against the US dollar. Possibly, if the European Union decided to cut off all the quantitative easing and ease, so there's a lot of mechanics here that if you understand the economic cycle, and if you understand the graph, and you understand the what you call the demand and supply, you know exactly when to buy the gold, silver, indices or currencies. So it's an art to learn that. And again, gold versus the dollar, you can see since in February 27th, 2000, the gold went up all the way to 2012 to almost 1,900 against the dollar. And then finally it came down today, 2017. You can see the price hanging around between 1,200 against the US dollar. So again, the question now is, but if you look at the chart very carefully, the trend is still up. In other words, if already the gold went up to the top, and it's already taken a one-third of the deductions, and now the gold is moving up. So the question now is there a good time to buy? And that's the reason why you understand the fundamental will tell you where its gold is going to go, and the technical will tell you when to buy or when to sell. In this case, when I look at the technical angle side of it, it looks like a very good buy, because if a technical point of view, you can see the head and shoulder is being formed on the left hand side, and we are expecting this using technical patterns. I roughly know where the goal is going to go. So in our view, moving forward, we're going to take the goal as a buy, right? Of course, then you have the indexes. Indexes basically S&P 500. Yesterday is the 9th of May, 2017. The S&P 500 has hit the 2,400 one more time, because of the amount of confidence they have in the market. The market is being pushed because of the zero interest rate borrowings in the US and also in Europe and in Japan. There's so much cheap money in the market. So people are so much borrowing and do not know where to put. They just keep dumping the money into the market. And what happens? The market keep moving and the market is not going to come down. And many of them forget the Lehman Brothers crash in 2008 and dot-com in 2002. And this is the same pattern as happening. But this time the rally has been phenomenally high. And everybody are just optimistic that it's going to break new highs. Possible. But in our case, we want to be defensive. Looking at the patterns there, we want to be defensive because we expect at least one third correction this year or early next year. How do you buy currencies? Currency likewise the same. In this case, currency you have pairs. Euro USD or Euro Japanese yen or Euro against the pound. In this case, it's Euro versus USD. So in this chart, you can see a series of patterns here. And what we do here is to analyze the pattern, looking at the pattern, looking at all the events that happened during the entire, from 2000 to 2017, we will see all the patterns of the chart and we make a decision. And the decision only comes through demand and supply. In this case, the US dollar in demand and the euro is not in demand because of the mess that is done in the European Union. But once the European Union come together, I see huge amount of potential to buy the euro because euro is undervalued. The US has already been overvalued. So long term, the euro looks like a good currency to buy and keep. On the other hand, US dollar could be a currency to keep, but I would have a balance of both. In this case, we're going to trade this particular chart in a swing trade. We buy and we sell at the right time. And then we look at buying stocks and shares like Apple share. We look at this guy here. We look at all the information that's given at the bottom, the earning per share, the price, the PE ratio. We look at earning, what we call EPS. We're looking at the gross margin of the interim profits and stuff like that. We also look at the last 52 weeks, how the currency performed, and we also look at the past week, the past year. So when we put all these numbers together, this will give us a valuation of this company. So the valuation of this company will make me decide whether to buy this particular Apple share moving forward. And this is a skill. Now, so besides also knowing the company data, we also look at corporate governance, the innovation, and the potential of the company creating new things so they propel the price to go up. All right, and again, so when you come into this industry, into retail market or to trade in the FX market, initially when you come in, you don't know that you don't know. So you tend not to make a lot of money, but you will lose, you'll win, and you're getting into the platform. And finally, when you start reading and start having a community, you're becoming aware, but yet still not competent enough to trade the market. There will become a time when you become competent and you also become conscious and you become aware. And this is where you're becoming a must-read in trading the FX market. The day will come where you just know that you know, and this is where you make the real money. So during the first two stages of the early stage, do not rush into the market. Put a little money and practice the real market. Don't waste your time in demo accounts. Because demo accounts, there's no any form of emotion, there's nothing there. When you go into the real account, everything comes in order. So then, of course, to minimize the risk of losing money, I will highly recommend you to go slow with a very small volume and test the market and learn with good people around you. Finally, did you buy any of these bonds, mutual funds? So you buy, think again whether the funds are giving you returns that can keep pace with inflation. And this is the law of abundance, H plus S plus IGA equals financial freedom. Now my principle always been the same. The house that I say I'm fully paid, so my house become a collateral in the time of need. I keep only 12 months of living expenses in the bank, so in the event I get retrenched or whatever, I have enough 12 months to sustain. And I will always have two income generating assets, so in the event if I lose my job, I still have an income from my asset that I've invested that will take care of my living expenses day to day. All right, so that brings up to this particular statement in the Bible. It says, where the money of the people of Egypt and the Canaan was gone, all Egypt came to Joseph and said, give us food. Why should we die before your eyes? Our money is all gone. Now look at this very carefully. Joseph was God-fearing man. God loves Joseph so much. And Pharaoh also loved Joseph very much because he gave him second of command when he interpreted the dream of 7 good years and 7 famine years in Egypt. And the day has come, the famine has come, everyone has nothing. Now Joseph would have, by looking at the statement, Joseph as a God-fearing man, as a nice gentleman, he would have given the food. No, he didn't do that. I learned from Joseph 2,000 years ago. Joseph says, go and bring your livestock. Now, livestock in today's context is collateral. Do you have a house to mortgage? Do you have a goal to change? Or do you have a particular stock to have a margin? Now, what do you have? So, so I will sell you food in exchange for your livestock since your money is gone. Now that Joseph is not going to give you the money in the hand like that. Joseph said that bring me your livestock. Now, what do you have today? Do a inventory check on your finances. Do inventory check on the asset that you have. Now, can you convert those cash? The day will come, the test will be done. And at that time, if you don't have the livestock with you, you are in trouble. You'll become bankrupt. And that's what you're not going to do. So the quadrant here says when you have the income, where do you put? You put in the right sector or the left sector. You put the right sector, I wish you all the best. You're not going to go very far. On the left sector, you have an asset, one day it will fit you and you're all good. All right, so this life, we will go to work, we accumulate money, we manage our risks, and then we manage our wealth, and one day you're going to die. And if we do die, you need to have a proper, what we call distribution plan. But this entire phase is properly planned. So if you want to be a good investor, plan your entire cycle well. So my job is simple. My job is to manage the risk. The risk only comes when we get married or we get terminally ill. So when that risk comes, I will transfer this risk to the insurance company. Because insurance is the only product that can create immediate estate. So, but the insurance is used at the right time, at the right place. Because insurance to me is purely 100% risk management. That's it, nothing more than that, right? And that brings me to the end of financial freedom. So now, as a trader myself, I make a living through trading the life market in the foreign exchange. And my job, the last 30 years of my life, I've been in the financial market. I've enjoyed the market. I'm really into the market, and I'm really having a beautiful lifestyle. But my lifestyle didn't come overnight. It took me years of practice, years of learning, years of understanding financial market, and finally I realized that the money is always there. The thing that you need right now is an acquired skill. So don't look too far. Don't look too far. Go down to any of our Ashok Trading Academy. We have the Ashok Academy all over the world now, and you can just go to our website, and also you can send an email to support@ashokfx.com, and we will send you the information where you can attend our school and enjoy the journey of financial freedom and acquire the skill to be one of those with financial freedom for the rest of your life. This is Ashok signing off, wishing all the best. Bye bye for now.